welcome you once. Thank you. We welcome you once again to our monthly Doing Business in Ghana webinar series. Ladies and gentlemen, you were with us last year. We had awesome time learning from our regulators and experts on various topics on doing business in Ghana. We are back 2025, and today we have a very important person in our midst to take us through the Office of the Registrar of Companies Directive on the waiver and exemption of both annual returns and audited accounts for small and medium-sized companies. Ladies and gentlemen, we have received a lot of your questions on how this regulation is supposed to be applied. Is there any other filing requirements? What is the auditor's review? Today, we will have all those answers. We plead with you, please keep your gadgets on mute. Thank you all for doing that already. After the presentation or after the expert has spoken, there'll be a question and answer session where we'll open the floor for questions. You put up your hand, you introduce yourself, and you give your question. Alternatively, you can text in the chat box. I'll also share very soon an email address or a WhatsApp number you can share your questions and your concerns on, and we would definitely read it out to the expert for address or redress. Without wasting much time, today we have with us Madam Sandra Kwaku, the Senior Company Inspector. In fact, I'll wait for her to give her introduction, and she's the right person to take us through the directive by the Office of the Registrar of Companies. Without wasting much time, it's already 11 o'clock. Madam Kwaku, if you are here with us.
Yes, I am, Decla. Good morning. Yes, so good morning, everyone. Thank you for having me. So I'm Sandra Kwaku, Head of Compliance with the ORC. And I have the privilege to give a little clarification on the directive we put out earlier last month on waivers granted by the registrar to companies, small companies. So I'll just go straight into it. Following the passage of the regulations to the Companies Act, that is LI 2473, it became necessary for the Registrar of Companies to give directives to explain, especially in terms of filing annual returns by small companies. And so this directive was given, and it was in line with classifying companies in terms of small, medium, and then large scale. We have to note that the Companies Act, Act 992, give the registrar the power to give waivers and exemptions to companies. We can see that under the section 381. And so the registrar has seen the need to do this, to grant this waiver. And the need was because we have low compliance rates when it comes to annual returns filings. And doing our research, we realized that the cost of audit puts a lot of administrative burden on companies. And because of that, companies will not file at all, or they will file some. Along the way, they leave it because they can't sustain it. And so our register is quite congested. We have a lot of companies on our database who haven't come at all to file their returns. Some have filed some, and then they just leave it in our system. And as a result of this, in fact, this year, we are in the process of decongesting our system. We are going to strike out quite a few companies so that our system will be decongested. And because of this, the registrar had to give the directive to enable companies to comply because the lesser the burden, the more inclined they will be to file their returns. And so with these powers and using the regulations to the Companies Act, the registrar has classified, as I said, the companies into 3: small, medium, and then the large companies. We want to take note that this waiver or exemption powers is for small and medium only, and not the large companies. The large companies, and it's also for private companies, not public companies. So this waiver is for private companies. So then what is the criteria for determining the classification? If you look on the directive that has been put on our screen, it gives us 2 criteria. That is turnover revenue and then assets. And so for companies that are classified as small, we are looking at their revenue that is from 0 to 400,000. And then their assets is also less than 400,000. For medium companies, you are looking at 400,001 to 10 million, and their assets same. For large companies, you are looking at a revenue of above 10 million cedis. And so this is what the registrar in consultation have come up with, so that when you find yourself in these categories, you know which class you belong. So with the exemptions, if you look at, I'm going to read directly from the regulations to the Companies Act. In fact, we paraphrased it here, but I'm going to read directly from it. So if you look at the section 52 of the Act, it says, a company which is classified as a small company or a medium company in accordance with Regulation 51 of the regulations to the Companies Act is exempted from the requirement to file annual returns in the form required under Section 126 of the Act. And B, shall annually confirm the accuracy of the information of the company contained in the register. And so this means that, yes, you file your returns, you have to complete the annual returns form, give us details of the current state of your company. And then when it comes to the financial statements, that's where the laxing has been put. We have laxed that. So I'll go on further because it explains further. 53, waiver of requirements for audit and then auditor's reports. It says 1, the requirement for audit of financial statements by an auditor and the publication of a report by the auditors in accordance with Section 137 of the Act is waived for a company which is classified as a small company in accordance with the Regulations 51. And so we are looking at a full audit of the company's financial statement and its publication as well. That is what we are waiving. 2, a small company is subject to an auditor review by the auditors of the company in accordance with A, the international standards on review engagements, and B, any other standards issued by the Internal Audit and Assurance Standards Board, applicable to the audit of less complex entities adopted by the Institute of Chartered Accountants, Ghana. And so though you are not to file a full report for us, auditors would have to review your financials for you. That is why you have appointed auditors. The Companies Act allows you to have auditors, external auditors. So they would have to do that review. But when you are coming to file your returns for the small and medium companies, scale companies, we are just saying that we would exempt you from filing the full version of that report and the publication as well. 53.3. It says that a report of auditors required under Section 137 of the Act in respect of a company classified as a small company shall only contain a brief report on the financial statements of the company prepared by the internal auditor of the company. So that is what we'll be asking for, a brief report. So the question is, what is a brief report? So we are looking at your cash flow, your balance sheet. That is what we will require from companies that are coming, small and medium scale companies that are coming to file their annual return. This is what we'll be looking out for. And so it's not that you are not filing your returns at all. You complete annual returns form and give us a brief report of the financial statements. And that is the cash flow and then the balance sheet. We are rolling out a new system. It's delayed a bit, but this year, hopefully, we are going to roll out that new system. And this is where the applicability of this act will be seen, because with a new XBR system that we are going to use for annual returns, financial statements, is going to help us be able to put this directive in perspective. Okay. So I think basically this is what's the explanation to what we put out there. If there are any questions, I am ready to take them so that maybe it can make it clearer. Okay, but this is a brief of what we have put out there. Tekla.
Hello, everyone. Thank you very. Oh, Mr. Justin Doku, I guess the question is already here. Just before you come on onto the, you come on with your question, please. I have shared in the chat box the WhatsApp number and the email for those who would want to use that option or that preference. Other than that, please put up your hand as Mr. Justina Doku has done, and you'll be called. So, Justina, please proceed with your question.
Thank you, Thekla, and thank you for this webinar. Good morning to everyone. So Miss Sandra Kwaku, if I got the name right, I think you raised the issue about working on your system. I think, if I'm right, I know that this directive is coming from your regulations, right?
Yes,
which came out somewhere around 2023. We are in 2025, and seeing that the registrar has been imposing fines or penalties for late filing of annual returns and all that, seeing that this is something that should have been in effect already, are we looking at having this taking effect this year, since we are already in February, and by April, I'm sure you will start hearing that the deadline is drawing near and all that? I'm just looking at the practicality of it. Whether when I get to ORC today to file annual returns for an SME, the data entry clerk or the company inspector there would ask me the basis upon which I'm doing this, seeing that I'm only coming with a report. And I don't know if, like you said, I really don't see how this is helping the small and medium enterprises, because if they still require the auditor to assess and say that, yes, you belong within this category, then we are not really lessening the burden that is already imposed on them. That is my thoughts, though. So please, I stand for correction. So if you can tell us when we should expect that when we get to ORC, the data entry clerk or the company inspector there is not going to turn me away because I'm not bringing what the ORC is requiring, or is not going to tell me that the system has not yet been designed for this. Therefore, I'll have to go and bring the full report. I would be very grateful, please. Thank you.
Okay, thank you very much for your question. Thank you. So what I will say is that, yes, once the directive was put out, it means that we have to start implementation. And we have started implementation. And what I forgot to mention was that this report, this summary report that we are asking for, is for the small scale companies. It's from the internal auditor, not the external auditor, because the external auditor, you know that they're going to do that full report for you. But we are saying no. So the internal auditor, obviously, they work in hand with the external auditors. So based on what they have prepared internally, all we are asking for is the balance sheet and the cash flow side. So that's the internal auditor can get for us. So you just add it to your annual returns form, and then we will take it. Even if it's just a brief report for us to know that this is what is happening in the company, we would accept it. And it's something that we have started implementing.
Justina, do you still have your hand up?
Yes, please. I have a follow-up to this. So again, Aunt Sandra just mentioned the fact that the internal auditors are supposed to do this. Practically, I think with the company I work with, we've actually discussed this, and the practicality of it is that a lot of these SMEs don't even have internal auditors. So that is also another challenge. I don't know if ORC has considered that bit. So now someone will think, do I have to bring in an internal auditor or just have the external auditor do this, and then I just extract the cash flow statement and the balance sheet and just file that with the annual returns forms? I'm just really thinking through it. Not a lot of SMEs have internal auditors. I really wish the ORC can put out, should I say, a survey to find out the number of SMEs that are using internal auditors. Practically, this is not happening. So I don't know if this is an add-on responsibility or they don't really think about the fact that whether you have an internal auditor or not, all we really require is to have your cash flow statements and balance sheets. So yeah, I don't know. And Sandra, can you please assist with this as well? Thank you. Thank you,
Yeah.
Thekla.
Okay. So I think the underlying word here is administrative burden on companies. And so if you think dealing with the external auditor is to your benefit, and that will be easier, it will be cheaper, it will be convenient for you to get the cash flow and balance sheet from them, we would accept. That's all we want anyway. If it will be cheaper for you to have an internal auditor too, that will do this. So I think you should weigh it. Which one is cost effective for you? The one that will be okay, you go with it. But we are making it easier for everybody, wherever you find yourself, the situation you find yourself in, whether it works for you to bring in the internal auditor details or the external auditor details. We can't put a hold on you if you bring it from the external auditor. If it's external auditor, all the better. But for those who cannot afford the external auditor's own and would want to keep an internal auditor who can give that to them, we would accept it. So the basket is open for anything. I mean, whichever side is coming from, we are ready to accept it. Justina, I hope I have answered your question.
And Sandra, one last time. Thekla, sorry, I'm not hijacking this.
Oh, no problem.
Okay, thank you. Yeah, so Sandra, I get where you're coming from, but especially when the companies are still required to even have external auditors, I don't see the need for an internal auditor then. I think then they should have just stuck with the fact that just bring the cash flow statements and balance sheet. Because you know that once you're putting the auditor's name on your record as the auditor, the external auditor is the one who is being named. You are supposed to pay some fees. And so if you would want an internal auditor to do this, it means double fees. And so I don't know, really, I don't see the need for an internal auditor at all if I still have to name an external auditor in all of these. And then secondly, I'm also looking at the fact that when I get to the point of filing, who is determining whether my cash flow is really within the threshold you've given? Is it okay if I just name something in my annual returns forms? Is that what you're looking at? Or what are you looking at to say that indeed I'm within this range or not? Because I thought you would look at it in terms of industry, especially someone in the mining industry, like you were doing with the BOs and the high risk and all that. I thought you would classify it within that because you wouldn't expect someone within the mining industry to probably have a cash flow of 5,000 cedis. so that people are not also underreporting just to be within a certain threshold to say that they are within the SME, just so that they can just get away with whatever it is. Because at the end of the day, whatever it is, you are going to file a GRA who also require the full financial statements anyway. So I don't see how we are not getting this linked with the other institutions as well. I'm sorry if I'm going beyond what I said I was going to ask, but as a typical example is a 10 application. Okay, GRA says they've stopped with producing 10. ORC says no, I still require 10. NIA is saying your Ghana card is enough. So there's so much confusion, and I think that it doesn't bolster investor confidence, and that is something we should really look at. If JIPC is saying they're trying to bring more people in here to invest, and ORC says I'm stifling the growth because this is my requirement, this is my system is not designed to take on this, then that is a challenge. If we can please look at that or address that, I'll be very grateful. Thank you, Thekla, for your time.
Thank you, Justina. I think these are very practical questions. We have another person, Madam Mamitu Tua. If you can proceed with your question.
Hi, Tekla.
Yes.
So there are a few things I wanted to clarify also because the exemptions that we are talking about were not actually granted in the Companies Act. They were enabled by the Companies Act, but they were set out in the company's regulations. Yeah. So the aim, and I was part of the team that worked on it with the ORC. Now we have to go back to the Companies Act, because when we talk about the classifications, we didn't have the flexibility to classify companies however we wanted. The Act says that the registrar will classify the companies as small, medium, or large for the purposes of granting exemptions under the Act. So it wasn't a classification that was for ease of management. It wasn't an administrative. It was specific to classifications of small, medium, and large for the purposes of granting those exemptions. So we had to look at companies and the size of the companies to decide that, you know, these companies, small companies, were companies that weren't making a lot of revenue and couldn't afford those larger compliance obligations that were imposed on all companies. So that was the purpose, the focus of the classification, to get the revenue base and the size of the company so that we could reduce the burden, the regulatory burden in terms of financial filing of financial statements and annual returns on those companies. So I wanted to clarify that that was the purpose. On the internal audit, I don't know. Sandra, I don't know how this thing even came about or got in there, but it was never part of our discussions. And then it just appeared as a last minute addition because the auditors were saying that without going through that full rigor of an audit, they will not be able to sign off an audit statement. So the idea was and this actually just applies to the auditor's report, not to the actual financial statements. There's already a standard in there for how the financial statements should be done. But the ICAG insisted that without going through a full-scale audit, if they were just to do a review, then they will not be placed to provide an auditor's report. So it looked like the external auditors were not willing, through their association, were saying they weren't willing to sign off an audit report if they had not undertaken a full-scale audit. And we also needed to balance that with the burden of letting companies, small companies, go through a full-scale audit when sometimes they had one shareholder and it was a family-owned business and they really didn't need that expense and the efforts of a full-scale audit. So that was the purpose of replacing it with an internal process that sort of mirrored an audit, or somebody who had that position where they could act as an internal reviewer of the audited accounts and provide a report on it. So that's the purpose. So I think any position analogous to an internal auditor will serve the purpose. And as Sandra was saying, the ORC is not fast on the title of internal auditor, but to have somebody internally who had the capacity to understand the audit outcomes and to sign off the report. I hope that provides clarity.
I think it helps, and I understand where Justina is coming from, because when we deal with these businesses, the fact is the person who is going to sign the report is going to charge you so much. And these people who have been licensed who have finished their certification, that's audit certification, who have the power, the right to sign off as the external auditors and not the internal accountants or anyone who is an internal auditor, because according to their regulation, the one who has to sign is a licensed auditor, and they charge as high as the external auditors are charging, because that's actually their profession. So in practice, from what Justina was saying, even though the wording of the publication seem to relieve the burden, in practice it's almost impossible, because the same people are going to charge us the same fees to sign off a review, which we need to attach for the report. So maybe this feedback we may want to consider, and maybe readjust the language.
Hey, we are not going back to Parliament to adjust anything, no, Tekla, please.
Then it means the
It
lacuna
took 2 years to get this thing out.
Okay,
No,
that's
but
an
I think
interesting
that
one.
because ORC is not fixed, well, it's not really very specific as to what the caliber of internal auditor is. And I think so there's room for flexibility. And I think in its implementation, we can all agree that we will allow some flexibility in the interpretation. But yeah, the ICAG, the auditors and the accountants, they hold on to this very, very, very dearly. And I don't know if you attended any of our stakeholder events when we were looking at this, drafting this law, but they were very, very, very clear that they were not going to accept anything that was going to reduce their fees.
Anyway, so that I think at this point we'll leave that one to the future. Maybe it will be resolved in the future. For once of time, because we have someone from GRA also on board. Please, I've seen this interesting question. I'm not sure we're able to take all the questions. There are lots of questions on the WhatsApp, but I'm going to ask this one on the chat page because I think it's interesting. It says, for those of us who use accounting softwares, can we just download the cash flow report and submit it without the internal auditors, if that's acceptable?
Yes. Yeah, Tekla, yes. So this is what we are asking for. We just need to see what is happening on the ground in the company's financial. So if you have the cash flow, it's good to go. Once we can tell revenue on it, it guides us. It helps us know the class that you are in, and we won't ask so much from you.
Very well. I can see Mr.
Sorry,
Enoch.
Tekla, if I can add something really quickly, we have to be careful about what we submit, because if we read the section well, the first part of the section says that the accounts for small companies shall be prepared by a certain standard. It is the auditor's report that it says that the internal auditor will sign off the report. Now, the auditor's report is separate from the actual statement, cash flow statements, and balance sheet. So let's be careful that we don't think that it is the accounts that are signed off by the internal report, that the accounts are prepared in a manner that is inconsistent with the standards that are in there. It's not a free-for-all standard. There's a standard embedded in there.
So at the end, it still have to go to the auditors.
No, it says the review. There's a standard that let me read from the actual
Yeah, but the auditors will do the review.
Yes, it says here that let me quickly scroll through the regulation. I don't know if you all have copies of
53.2.
Or I should paste them.
53.2.
Yes. So if you look at the 53 to accordance with the international standards for review engagements and other standards issued by the International Auditor Assurance, and this is provided by the ICAG. They provided this wording. So there's a standard. So it has to comply with the standard. And then the report of the auditors is substituted with this internal report.
Okay. So if they get a software that meets the standard, that should be fine.
Yes, it has
Okay.
to meet the standard.
Okay, I think that should be comforting enough, ladies and gentlemen. We get a software that meets the internationally approved standard, accounting standards, and we can just print and attach to our annual reporting.
It's subject to an auditor review by the auditor.
So we can't avoid that one.
So no,
Okay.
it's not a full. So they assured us that it's not the same as a full-scale audit. I hope there are some accountants here who can explain it to us. But the ICAG said it's not a full-scale audit, and it certainly doesn't cost the same as a full audit.
Okay. So when the GRA personnel comes on board, he will clarify better. Mr. Enoch, your hand has been up for some time. Yes, please go ahead.
Right, thank you very much. So I am intrigued about one concept and I want to confirm if this applies here. So I have been doing continuous business process improvement for a while, and I know that people do have challenges all the time. And as has been said, it's sometimes very difficult to even have internal auditors. So with that concept of Inobua, people helping one another and knowing that there's that Engineers Without Borders, Lawyers Without Borders, and things like that. I'm just thinking, do we have a situation here in Ghana where we have Auditors Without Borders, as an example, where people can provide at very, very minimal fees some of these auditors review, as we are asking for, to help businesses? Because I know all of these are contingent on being able to let people be able to even get grants, loan financing, to help improve the economy and their businesses. So I'm just thinking, how do we reorient, if there's none, to sort of help set something like this up? Right. Thank you very much.
Thank you. I'm not sure if Madam Sandra can respond to this, but we get the idea.
I think this will be for the auditors to
Yes.
respond.
Absolutely. We are hoping that in the future there'll be a system of that so where we can have easy access to services at affordable prices. Ladies and gentlemen, if I have tons of questions here, I'll read just a few, but 11:30 is up, so Madam, just quickly bear with me to read this one. Somebody was asking that the turnover and then the asset value, are we asking for a year? If it's a year, what happens to someone's business that fluctuates? Some years higher, some years lower. Which bracket will I fall in?
Yes, it's yearly. Turnover and then revenue is for the year. And so as and when, then annual returns, we submit it yearly. So if this year is within the bracket and it's a range. And so if it's less than the range, you still fall under the small scale. If it's, that's how it works. It's per the year.
Great. So, Madam and Doris Andro, if you're still online, I guess you get your question. So, at a particular year, you can be small or medium size. At another particular year, you can be a large scale or a large size business based on the revenue you made in the year. So it isn't fixed that you qualify every year or for the rest of your existence. It's as and when your revenue increases or decreases. Someone asked, so if filing is still required, just as an audited account, but rather a brief, I think you've responded to that, so we can ignore that, please. And the last question, if there's anyone online, I think this is just piling up costs for the small company, the cost of software on top. Yeah, unfortunately, we can't do anything about it. So I think going forward, maybe we would petition for a review since this has gone to Parliament already. We may probably have to petition for a review and amendments where we can actually discuss the practical questions and issues and how the problem can be resolved. But as much as possible, I think the intention is clear that they want to reduce your burden. So as a business, figure out which of the available options is easy for you and can be accepted or approved by the regulator during your filing, and then you choose that. It will still come at a cost, that's the point, but hopefully it wouldn't be as high as we used to pay previously. On that note, ladies and gentlemen, I can see there isn't any more question for Madam Sandra Kweku from the Office of the Registrar of Companies. Madam Lawyer Mami Titua, thank you so much for clarifying the intention behind. I think it has put a lot of concerns at rest. So on this note, we quickly jump and invite the Assistant Commissioner for the Ghana Revenue Authority, Mr. Dominic Knapp, if you are here, and if you would want to take over to help us on the GRA processes for small and medium size. And let's see how best we can reduce, especially now that the audited accounts is still an issue. Mr. Knapp, I hand over to you if you're here. And Madam Kweku, thank you so much. We are grateful that you found time out of your very busy schedule to join us and explain the content of the directive to us. We would advise our clients accordingly. Thank you very much. Mr. Knapp, please take over.
Thank you very much, Lawyer Tekla, and thanks to all your, I don't know whether they are your clients or your colleagues in business.
Everybody's here.
It has been a while. Tekla, I'm sure you are making it big, and you don't even look for your old friends.
Oh, Mr.
All right. Yeah, so my name is Dominic Knapp, Assistant Commissioner with the Ghana Revenue Authority, with the Policy and Programs Department, heading the Design and Monitoring Unit. And I think the discussion has been very interesting. I have followed keenly, and I really appreciate the concerns expressed. But there's one thing that we have to take note of. There are many forms of business units. We have the sole proprietorship, we have the partnership, we have a company, then company limited by guarantee. Is that okay? And then trust. And GRA, these forms of business units are very, very important because of the tax implications of each one of them. Now let's look at, first of all, the sole proprietorship. This is a business that is run by one person, free enough to consult, but responsible for all losses and profits. When it comes to partnership, it is a business, if you like, an association between 2 or more persons, up to 20. 21 persons cannot form a partnership, and 1 person can also run a partnership. When it comes to tax, okay, let's just run through the other ones, then we can look at the tax. Then when it comes to company, we can have 1 shareholder, a minimum of 2 directors, and 1 secretary. And I'm sure the Registrar of Companies rep did justice to it. Then we have company limited by guarantee. Is that okay? Now let's come and look at the tax implications and whether we need auditors in each one of them. When it comes to a sole proprietorship, listen to me carefully. You don't need a chartered accountant or an auditor to prepare your accounts. You can do it yourself. Just that it must really reflect your business transaction. You can do it yourself, you can sign, bring it to GRA, and would use it. Please note, I am talking from perspective of GRA. I am not talking about other companies or other organizations. I'm talking of GRA. So once you are a sole proprietor or a sole proprietress, when you submit a return, once it is signed, authenticated, we are fine. We don't care if it is signed by a chartered accountant, we are fine. If it is signed by yourself, you are fine. If it's signed by an enemy, we are fine. We just want to be sure that you are okay with whoever has signed. Number 2, when it comes to partnership, it is a business put together by 2 or more persons with the sole aim of making profits. It is only in companies that we require, whether small, medium, or big, we require an account. You see, I must admit that yes, cost is of a serious consideration when it comes to some of these things. But let's look at it this way. You have a person who is certified, answerable to the Institute of General Accountants, coming to look at your books to say that all is well. If you don't want that kind of validation, I don't know what else you want. In some cases, you establish your company, so you are a shareholder. You ask other persons to come and manage it for you. So you can see that management is separate from control. Now, you would want them to come and tell you that all is well with your business. Otherwise, before you realize, the whole business is run down. So I think that as much as we want to make profit as we run our businesses, we should also be prepared to ensure that our businesses do not run aground by persons who actually are not committed. And the only person who can give us that kind of a validation or that can give that opinion is the accountant, is it the auditor. I believe strongly that if you spend one more city, engage the accountant to come and give you that validation, it provides the comfort that you need. So don't let us sometimes look at, I agree, yes, I mean, the accountants can charge. You get it? Because they must also be able to keep body and soul together. But we can always negotiate with them to reduce it. Is that okay? So that we are comfortable that whatever they give us is what it is. Because they have their reputation and they have, as I said, ICA Ghana to monitor whatever they do. So they're answerable to them. If they give an opinion that does not really square with what is on the ground, they are going to be sanctioned. And ICA Ghana does not joke with that. So it is for this reason I think that if you are running even an enterprise and you can afford it, allow the accountant to come and look at it and give you a validation that all is well. Sometimes, I mean, we run businesses without even knowing that our private interest is actually running into the business interest. It doesn't augur well. If you are not careful, then that creates a lot of problems. Nigeria comes to do an audit and then they can't really reconcile the financial statement that you have submitted and then what they see on the ground. Then they begin to impute ill motives. So to avoid that, you need a second opinion, to validate some of this. Now, the issue I just want to stress is that if you are running an enterprise, please, you can put together your income and expenditure and submit to GRA, and you are good to go. If you are running a partnership, you can also do same. But if it's a company, it doesn't matter whether it is small, medium, or large. We expect an auditor qualified by all standards to validate with the person's number that we can trace to the institute as being legitimate, that we can have some kind of comfort that indeed we can rely on these accounts as a return on your activity. I submit myself to questions if there are any. Thank you very much.
Wow. Thank you very much. Ladies and gentlemen, I think you have heard from the Ghana Revenue Authority. So the underlying concern you should have is the type of business entity you have registered. According to him, it doesn't matter your revenue for the year. So far as your company is a limited liability company with shares, then you are required to have an audited account, even if your revenue falls within the small or medium size, which is being waived by the Office of the Registrar of Companies. So the floor is open, ladies, for your questions. If there's any question from
Hello,
anyone.
Tekla.
Yes, Mr. Bush.
Yeah, good morning. I thank you for this presentation and webinar. It's been insightful. My question goes to the GRA boss. I have a question, two questions actually. If a company has not been operating, like last year, for a reason, the company suspended operations for a time to do restructuring, and they are supposed to do filing this year. what are they supposed to present since they did not operate full scale the whole financial year 2024? And then also with the sole proprietorship, does the law mandate them to withhold taxes in terms of rent? Are they mandated by the law, unlike the company? With the sole proprietor, are you also mandated by law to withhold any taxes in terms of like rent payment to your landlord? These are my two questions.
Okay. Yeah, thank you very much. Can I go ahead?
Please go ahead, sir.
All right, thank you very much. Yeah, so the Ghana Revenue Authority is a friend of all businesses. And I'm sure Lawyer Tekla will bear me out that we don't want to take 1% more than what the law requires of us. And even in some cases, when we take more than what the law requires of us, we refund. And we refund gleefully. We are happy to refund, and we've been doing that. Having said that, if a company is undergoing restructuring and hasn't run any business activity, one, before even the restructure, we expect you to write to GRA that you want to undergo restructuring. Once you submit that letter, it will be on your file. When you are undergoing a restructuring, at least we may monitor. When you are submitting your tax return, your accounts, or your financial statement, as you call it, there hasn't been any activity, so revenue will be zero. There may be cost because you pay salaries even though you don't have revenue. Are you getting this? And then your financial position, what they call the balance sheet, will also have the number because we are talking about balances that you are carrying forward from previous periods. And submit to GRA, there won't be any tax to pay. But see, if you don't do that, then that becomes a problem. The other issue is that you are not running. So write to GRA that you want to actually have a suspension. And when you are back, you write to us then to reactivate it. So these are the options that you have. But I must indicate that in some cases, we have situations where we are written to that these companies are actually undergoing some restructuring. So they want to suspend the activity. Only for you to go and realize that they are actively working. So that really creates a lot of problems. So having said that, you're right, occasionally we send our officers to go around and be sure that what they are doing or what they are saying is right. The second aspect of the question that has to do with withholding, let me just talk generally and briefly on withholding and now touch on the specific question that he has asked. A withholding tax is actually a tax on account. And even in some cases too, it could be a final withholding tax. Now, what it is that any person making a payment, if the law requires, the law says withhold and pay to GRA. Once you pay, so if I'm making a payment to Lawyer Tekla and the law says I should withhold, then I'll withhold and pay you less the tax. And you will have a certificate to prove that your amount, part of it has gone into tax payment. So now when you want to know how much you have paid, that also adds up to the taxes that you have paid. That is how the withholding actually works. So we have an authorized agent, and then we have what we call a withholdee. An authorized agent is a person who is required to withhold. Listen to me carefully, who is required to withhold. Then the withholdee is a person who has actually suffered the withholding tax deduction. Now, to answer the question specifically, when it comes to rent under Section 115 of Act 896, okay, let me just step back. When it comes to individuals, the law does not allow them to withhold unless under certain circumstances. Because the individual can just close their business like any information to the GRA. So such operations are really, if you like, they are not stable. Some of them come up when there's an activity and then they close down when the activity goes down. So the law perceives them as individuals and therefore should not withhold. As I said, under certain circumstances. Number one, if such individuals have employees, then they have become employers. And the law requires that when they are paying their employees, they should withhold the tax and pay to GRA. Then under section 115, that is specifically to his issue, and that has to do with rental payment. The law says that if you are an individual running your business, an enterprise, and you are making a payment in respect of rent, the question we are asking is that rental income that you are paying, does it have something to do with the business? If it is business oriented, then you are required to withhold. If it is not business and it is personal, then you cannot withhold. Let me draw a distinction between the two. So Lawyer Tekla is running an enterprise. Lawyer Tekla rents a house from A Limited. The house Lawyer Tekla has rented is for her residence. Can she withhold? No, she cannot withhold, because it is in her personal capacity. But if Lawyer Tekla Enterprise rents the premises in the name of the business for Lawyer Tekla, then there must be a withholding. Why? Because it is because of the business that rental income is being paid. So in effect, it says that when it comes to rental income, withhold if it has to do with the conduct of business. But if it has nothing to do with the conduct of business, you cannot withhold. Let's take note of that. And the reason is that Commissioner can track if it is the conduct of business. Once you submit your tax returns and we see rental payments, we can follow up and know who you pay to, so that whatever we need to do, we can do. So we can always reconcile. We can always get evidence. But if it is your house that you are living in, that you have rented in your personal capacity, when you withhold, we may not even get you to pay the money to us. I recall one time a friend of mine who rented a place, or was actually going to rent a place, but his money was not up. Let's assume he was going to pay 10,500. So he only had 10,000, he didn't have the 500. Then the withholding tax happens to be equal to the 500. Then he told the landlord that by law, I'm required to withhold 500. So I'm withholding and I'll pay that money to GRA. In his mind, by the time he would be required to make that payment, he would have gotten the 500. But he didn't know that the law did not, or does not allow him as an individual to withhold. So he called me on phone and put it on the loudspeaker and said, now, I am making a rental payment to my landlord and I want to withhold. So you are on a loudspeaker. And I felt very bad, very uncomfortable, because I knew he was going to be in trouble. So I asked him the question, are you renting the place to conduct business? He said, no, residential. Are you running the business? He said, no, he's an employee working for this company. I said, I'm afraid you cannot withhold. Pay all the money to the landlord. And then the landlord go and pay his portion of the tax. Then I heard in the background, you haven't even come to my house and you are becoming a lawyer. I don't want you in my house. And that was how he lost the place. So later I called him. I said, oh, he ought to have asked before putting me on a speaker. And there was nothing I could do. So I had to speak up. And that led to his being denied the opportunity to live in that man's house. Thank you very much.
Thank you. Just a follow-up, sir. I asked these questions in terms of this because of my previous experience with the GRA audit team. When you are filing, you are asked whether you are renting or you own the property. and there are columns where you are supposed to provide your landlord's details and their TIN number and everything. We all know practically that you as an individual withholding tax from your landlord may lead to what you just described, you losing the premises in its entirety. That, oh, I don't want you anymore as my tenant. But the GRA said that we should provide the landlord's details and how much was paid to the person. You have done that. Then you go and then they audit you and they say that you are supposed to pay the amount that you refuse to withhold. And you have provided the landlord's details to the GRA that this is who I pay to. This is the person's thing. I have paid the rent. The person didn't allow me to withhold, but they say no, you are supposed to withhold. And you are an enterprise. You are not a limited liability company. In this case, how do you resolve it?
Yeah, thank you very much. I think I've answered that question, but let me just provide further clarity. Now, the tax return indicates that if you have rental payment, indicate the name of the landlord, the TIN and whatnot. That makes it business. If it is your personal, the house that you have rented to live in, you don't provide that information. But if it is a business premises that you are operating, that is what you are supposed to provide. Because the reason is that, and I've just said that, the law requires you to withhold because we can always trace. But if it's your private, a place you have rented to live in, which has nothing to do with the business, you don't disclose that. Let me also say that when it comes to GRA, with all respect, is a law that all of us seated here, our parliamentarians have put together, that we are enforcing. The law is not from GRA. The law is from Parliament. Is that okay? So we would interpret the law the way you would want us to interpret it. And that's exactly what we are doing. So if you don't withhold or sanction, because the law says you should be sanctioned, I get it. But having said that, I think that we have to do a lot of education around this area so that a lot of people get to know exactly what is happening. But again, having said that, I think we are out there doing a lot. This information that I'm sharing, that is part of GRE education. So that is it, my boss. Thank you.
Thank you, sir.
Thank you. Thank you. Madam Yvonne, your hand has been up for a while. Please proceed.
Hello. Can you hear
Yes,
me?
boss. Yes, boss.
Okay, I wanted to find out if in this day and age of AI everywhere, is GRA planning to digitalize everything? Like if I have a file open at GRA, I should be able to go online and you know, if I have a letter to send to you, I send it online. And then also second question is oh gosh. The second question is if I'm paying tax on my services, on my business, which part of the money am I paying? Am I like maybe the capital, then the profit, or after deducting the capital from the entire amount before I pay tax on my profit? I want to know you know, which amount do I pay the tax on?
All right. Yeah, thank you very much. You would agree with me that GRA has done so much when it comes to automation or digitalization.
Hello, sir.
Hello?
Recording.
Yeah. Technology can fail sometimes. Ladies and gentlemen, if you can hear me.
I can hear you.
Great. Unfortunately, we've lost Mr. Nab, and our time is also very much up. It's 12 midday. And yes, we have heard from the two regulators, the Office of the Registrar of Companies and the Ghana Revenue Authority. Are small and medium-sized companies exempted in reality? It's still a question which we have been left in doubt, and I guess we will take our own decisions as we operate. But compliance is very important. I think as much as possible, knowing the type of business entity from what the GRA or expert official has said is the most important thing. If your business is a limited liability company, then it doesn't matter whether your revenue falls within small or medium size. According to the Ghana Revenue or Income Tax Act, you are required to have an auditor certify your account, submit the account to the GRA. So even if the ORT it for you because of your revenue base, so far as your company is limited liability, the audit account is still required for your tax. Mr. Nab, no, we can't hear you. I think he's still trying to join. Mr. Nab, can you hear me? Anyway, not to worry because much of our time is already spent, as already said. And I know we've ended today's session with a lot more questions than the answers we were looking for. And it also means that doing business in Ghana indeed is hard because we have a lot of regulatory requirements, but there are always answers. I assure you, there are answers to these regulatory nuances. Make sure before you start your business, or make sure as you do your business, you get proper advice on your business and your commercial decisions on ways to comply or reduce your risk, your compliance risk. Yes, the session has also been recorded and we are going to share. Please watch on LinkedIn page. We'll be sharing the recorded session with everyone. And if you have any follow-up questions, feel free to still send to the WhatsApp messages or send us an email. We'll forward it to the regulators and get back to you. On that note, ladies and gentlemen, our time is up.
Can you hear me?
Hey, finally.
No, I'm using my phone now. Okay.
Yes, we can hear you now.
Okay, let me go off on the. All right, thank you very much. I'm very sorry about that. That is the downside of technology. The question that asks about AI. So you see why we don't want to go fully AI. Yeah, so talking about AI, I started off by saying that GRA has actually embarked on serious reforms. And this is just because of the reaction from our clients regarding the fact that we don't have to actually be on normal operation. I mean, what's the name? Manual operations. So we have online filing where taxpayers can file online, can pay online, and so on and so forth. And we are also trying to digitalize other processes of our tax administration. So to answer your question carefully, even in Ghana, the whole Ghana as a country, we haven't been able to digitalize, even the whole country. That has a bigger pace. We haven't been able to do that. And you want GRA that is very small and has small money to be able to do that. Yes, we intend to do that, but it is going to be gradual, and I'm sure we'll get there someday. Is that okay? But having said that, we are building what we call data warehousing, so that we can have data collected. Then we can get information. Is that okay? Through information sharing about taxpayers who are conducting business activities and they are not paying. So that is where we are going to. We are almost getting to. The second aspect has to do with our taxes, whether they are on capital profit. We have two types of taxes. We have direct tax and indirect tax. The indirect tax is what we are discussing, and that one is on profit. If there's no profit, you don't pay the tax. So please, that is the critical thing that we have to take home, with no profit, no tax.
Yes.
Thank you very much.
You're welcome. But the final requirements still applies.
No, I don't get you. If you say final requirement, like
you still have to file your audited account, even if you don't make profits for the year.
Yes. But audited accounts in respect of companies.
Very
But
well.
if it's just an enterprise or a partnership, you don't need an audited account.
Very well. Mr. Kingsley Nkrumah, I see your hand up.
Yes, please.
Yes. Our time is up, so quickly rush to.
Okay. Thank you very much. Mr. Commissioner, I work with an enterprise, and when our clients make payment to us, they withhold 7% withholding VAT, and it has 6 months expiry period. So I want to know, is the 6 months period start from the date of payment or the date of invoice?
All right. Thank you very much. Every VAT, in fact, it's talking about to claim an input. Is that okay? When you incur, you pay for services, you pay for your raw materials, you pay for whatever. Then when you sell, you are supposed to claim it from your output. And the law says that it has 6 months. Is that okay? Period before expiry. You cannot utilize it after 6 months. And it has to do with payment. This is the date of the invoice. Is that okay? Hello?
Yes, sir. We can hear you.
So that is it. Yeah. So it's the date on the invoice.
Mr. Nab.
Yes.
They said Oliver asked for more. Can we ask for more and plead that you come back on our next month webinar series to help us with this tax? Because I think that we have a lot of tax.
Yes. I'm available.
Great. Ladies and gentlemen, I think that we should have a tax session at our next next month session, so that we can address all the tax queries that we have. But on our topic today, I believe that by God's grace, we've had the responses from both regulators, and we know what to do to ensure compliance with both the GRA and the ORC. For further questions, we have shared the email and our WhatsApp. Do get in touch, and as much as possible, we would reach out back to you with the possible answers or where you can get your resolution to any query you may have. On that note, ladies and gentlemen, we draw our curtain for today. Thank you so much. This couldn't that was a funny one. Thank you so much for joining. We'll meet again next month. God bless you.
Come and see this machine. This small portable
Bye.
Bye, Tekla.
Bye, sir.
Coming. I have to greet everybody before I leave. Hey, Nugudin. How are we? Cool.